Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning. The equity markets are still volatile. We're still in the sideways trading range. However, we are in the new uptrend. We did get a follow-through day on Friday. Now let's talk about that a little bit. Market hit a low on August 24th, and then about September 8th, it staged a follow-through day. And the market rallied until the Fed meeting. Then it was met with a lot of distribution. Again, went into another correction, and September 29th marked another low. And Friday we had this follow-through day. So let's talk about the concept of this follow-through day. It's when an index rises about 1%, 1.2% or greater on volume greater than the day before, after it appeared that it may have bottomed. And that was exactly the situation we had on Friday, where the S&P rose 1.4% on 10% greater volume, and the NASDAQ rose 1.7% on about 10% increase in volume. Now, the significance of that follow-through day is that every market rally starts with a follow-through day. If you look over the last 100 years of history in the markets, every new rally had a follow-through day. But the thing to keep in mind is not every follow-through day guarantees you a rally. So what are the things to look out for? Well, if a follow-through day is followed with some heavy distribution, meaning where the markets sell off on greater volume than the day before, and if that event happens 3 or 4 days after that follow-through day, then the probability of success are minimized. And such was the case back in September 8th when we got that follow-through day. The next day, the market immediately sold off on greater volume than the day before. So the whole point of all this, what we want you to look for is see if we're going to get any heavy distribution over the next few days, because we got the follow-through day on Friday. So we're looking to see if the market can maintain, get some confirmation to this upside, look at the quality stocks that are breaking out, and so forth. So right now we still have this wide trading range where the S&P, the floor seems to be 1900. Every time it undercuts it, it's bounced off of it. But on the upper side, a resistance is still 2000. So we'd like to see the S&P, see if it can get through this level. Similarly on the NASDAQ, wide ranges, 4,500, below 4,500, it bounces back. 4,600 seems to be stable there, and we're trading above 4,700. And we really like to see the NASDAQ get above 4,900 before we can say, like, okay, we have some really good confirmation on this market. So again, the key here is, are we going to get any heavy distribution following this Friday's follow-through day? Because what that tells us is that institutions are using these rallies to sell into them. And that's bad, and that means we may still be moving sideways. In past corrections similar to this, everyone talks about August 2011. It took us basically about 4 months to get out of correction. So it's to be seen if we're going to see this once again. Same thing happened in 2010. 1997, at the end of the year, the correction was a little bit less. So the key here, again, is look at quality stocks. If they're breaking out, we do have some of those. You can look at stocks like Nike and Starbucks are still near their all-time highs. Amazon's doing quite well. This morning we have a lot of growth stocks I talked about earlier. Universal Holdings, symbol UVE, EPAM Software, symbol EPAM. Celgene's having a move. So you have some good quality stocks bouncing here pretty well. But the key is going to be, are we going to see any heavy selling over the next few days? So as always, let price and volume be your guide. If you see that heavy selling coming in, this rally may not hold. On the other hand, if it does confirm, we might get some more upside. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.